we have the biggest panel of the day, just given that tokenized equities are the biggest opportunity in RWA. That is the hypothesis. We will solve if that's true. I personally think it's part of the biggest opportunity. I think that's the general consensus here. So with that, I don't know if you really need introductions here, but let's start with those. Cameron.
Sure, I'm Cameron, one of the co-founders of Gemini.
Hi, I'm Sporn. I lead BitGo's prime brokerage and U.S. institutional sales teams.
Gabriel, co-founder and CEO of Dinari.
All right, we got that out of the way. So are tokenized equities the biggest opportunity? I think, Cameron, you have a lot of views on more high level how this is going to change capital markets more broadly, potentially a lot of your users and how you interact with other parts of the capital market stack. From the custodial side, you guys were pioneers in the tri-party agreement and tokenized money market funds, and then e-shares in the Dinari financial network. So we'll start with you. Is this the biggest opportunity in RWA?
I think it's a very large opportunity. Who here has read Project Crypto? It was a speech issued by SEC Chairman Paul Atkins.
For the record, very few hands came up. So
I saw one hand. I see two hands.
Yeah, there you go.
3 hands. Okay. That's your homework after this panel. It's about a 10-minute read. But this SEC, this commission is taking markets on chain. That's the TLDR of Project Crypto. And it's super exciting when you read it, the vision for that and the tokenization of equities and markets. And I think it's probably one of the most groundbreaking things I've read in a very, very long time. And I think somehow maybe it was missed. Clearly, not everybody's read it, but it was a seminal piece this summer. And I think that's really the vision. It really outlines like what this commission is going to do via rulemaking, exemptions, and guidance to do that. So you have to imagine a world where like you can hold, really, once an asset is tokenized, it's sort of jailbroken from the existing traditional financial system. So today you have to have a brokerage account for your equities, an FCM for your commodities, a bank account for your dollars. And if you tokenize, all that can actually live in one place in a super app. And so the siloed, balkanized traditional financial world really goes away. It sort of melts into one. And everything goes on chain and can move through the internet. And that's really the vision. I think we've all been sort of thinking about that for many, many years. And we would have, if we sat here a year ago, we'd say, yeah, we all agree that that's where the puck is going. I think the question is, how long will it take to get there? And we'd probably say, in the next decade. But if you read Project Crypto, you realize it's actually probably within the next year. And that is sort of like the big groundbreaking, eye-opening aspect of it. And what does that future look like? And I think it's a future where every part of your financial life can live on chain. You may not know that it's on chain or care that it's on chain, but it will be on chain. And you can do everything sort of in one app, one experience. So I'll stop there, but that's how.
One app, one experience. It's called Gemini. It's in your app store.
You said it.
Yeah.
I would just add that, I think given the size of the equity market, it is the biggest opportunity. Last week, I was at the All-In Summit in LA, and David Sachs, who's the AI and crypto czar for the White House, was actually quite bullish. It came up on one of the panels, and he said the ability to trade 24/7, instant or near instant settlement, that he sees value, at least for public equities that have already gotten SEC approval. So I think that was, him being on board and helping to push that, I think would be critical to moving forward in the space.
What was the view on, 24/7 trading? We barely have liquidity in the current market structure, right? 9:30 to 4. So is it for purposes of risk taking? Is it for purposes of arbitrage hedging? Is it for global cap markets? Is it for, functioning credit markets to have a functioning equity market 24/7? Or was it something we should just be able to trade at 2:00 in the morning if we feel like we want to?
Yeah, I think it is about access beyond 9:30 to 4, at least to start, and we'll have to see how those other verticals play out.
It probably, this is a random thought, but it probably does draw a lot of international capital into U.S. equity markets. That's
Right.
without a doubt, right? You're kind of relegated to your own local markets if you're in Europe or Asia. Not that it's a bad thing, but if they had the capacity to trade and access markets, and that's huge for U.S.
Yeah, I
equities.
think that's a great point, is that the non-US story is about exporting capital markets to the rest of the world. Anywhere the internet will go, just like Tether has exported, 180 billion USD to emerging markets and parts of the world that otherwise would not have access to USD. And so I think the non-US story is like very obvious. Just export so that anybody in the world with an internet connection or Starlink can access US equities and be part of that growth story. And that's going to lift a lot of people up. That's a pretty incredible breakthrough. The US story, I think, is more about like 24/7, 365 modernization, interoperability, and jailbreaking these assets out of these different silos, moving it all on chain. Think of like a video store like a Blockbuster. You had to return the tape to the same video store. Actually,
you better rewind it or
you
you're
could
going
do
to
it
pay
probably
for
within the network. But your mom and pop video store, you had to deliver it there, even though it was the same, Top Gun movie.
Yep.
And so I think that we're going to see that fungibility and interoperability move on chain.
Any take, Gabe?
I think people always take this as a threat, but it's really not meant to be. But I think the way the financial system works today, you do have all these silos like depositories and custodians and broker dealers and clearing mechanisms and exchanges and all these things. And once you move these things on chain, it's not entirely clear what these distinctions mean. And so I'm not advocating that we sort of blow up what was, but we do need to start asking questions about what does it look like when we do follow Project Crypto and move these things.
All right, I'm going to ask you that question. What does it look like? That's a tough question. That's why people don't want to ask it.
Yeah, I think each one of these silos today are multi-billion-dollar companies, and so there's a lot for people to lose. So I think there's going to be a lot of friction between what it is today and the end state and getting to the end state. But I think it can be done in a very smooth way that doesn't disrupt the capital markets extensively. But the end state is a really interesting place where, everything becomes efficient because these silos are actually not that efficient. But then it's like the Gemini and New York Stock Exchange, what's the difference in this new world order, right? And I think that's actually for the benefit for people to be able to go to any of these places and buy whatever assets they want to actually invest in, because people actually don't like opening up 5 different accounts in different places to buy various assets. They'd rather just stay with the UI and the UX that they're comfortable with, that they are already familiar with, and just be able to have all these access to these different assets that they want to invest in, that they hear about on social media or whatever. And I think that is the end state that we're heading towards, that all these companies are going to be empowered to be able to gain access to all these different assets, because likely there's going to be some kind of, whether it's like a consortium of companies or these existing companies coming together on a standard or whatever form it takes, the end state is one integration, one access point to be able to access all these different assets.
Yeah. So we don't want to go to local video stores anymore. My aunt and uncle had a video store growing up, so I'm a little bit...
I love video stores. There's still a Blockbuster in, I think, Bend, Oregon, the last Blockbuster.
That you frequent on a regular basis?
All the time.
Doing that? Yeah. Okay. So we'll talk about some of the boring stuff now. The rails. We talk about what's happening with Broadridge and DTCC and, some of the stuff around legal agreements. Everyone loves a good tri-party. And Gabe, you mentioned this quite a bit, which is a lot of the change in the standardization, which standardization always creates value, creates momentum or creates value. The US has benefited over centuries because of standardization, particularly around war and financial systems. So where are we in terms of standardizing infrastructure? Are we close? Do you feel like it's happening? Have you had personal experiences where you're feeling momentum? Maybe talk in a little more specifics as much as you can.
Well, I think for the three people that has in the room that has read Project Crypto, it's
At the
really
very least, ChatGPT, Project Crypto.
it's
I think
really
it's a
very
requirement.
clear
We're
because
going to test people
That's
at the
it.
end of the
yeah.
day.
But the SEC is asking us to.
Yeah.
Right. At the end of the day, they've sort of thrown down the gauntlet and said, like, this is what the industry has to do to make this work. It's not like it's either going to happen one way or the other, right? Like everyone kind of goes at it with their own standard, and then one wins out, and sort of we kind of adopt that standard, or it's going to be a group of companies that come together to form a standard. And I've been part of both discussions. Because there are companies that are out there today that are talking behind closed doors about, oh yeah, we're just going to supplant, DTCC and all this stuff. Like it's going to be our standard that wins with our chain or whatever. And then there are the participants in the market that basically said, oh no, actually we have to come together to form a standard that everyone can sort of adopt, that doesn't break securities laws, that enables customer protection, but also enables this freedom that Cameron was talking about. And so I think there are those two schools of thought. We're waiting on the SEC, essentially to decide.
If you could sway the SEC between the two schools of thought, which one would you sway them towards?
Oh, I'm on the side of let's come together as a group to adopt the standard, because I have a lot of money in the capital markets and I don't want to blow up the capital markets.
Yeah.
So
I think BitGo is probably aligned with that as well.
Yeah. When I was here 2 years ago, a lot of the focus was around tokenized money market funds, right? Pretty much every panel was focused on that. And, we have seen growth there, right? We've seen the largest asset managers tokenize their money market funds. I think we're a custodian for all or almost all of them. And so what are the use cases there? The use
Who are you
case.
not a custodian for? Are they here today?
There's a new one that's launching every week. So
All right. Making
if
sure.
they're not, hopefully they will be soon. But where we've seen value is really around tri-party collateral management and posting it as collateral. And so
Can you give us like a specific example?
yeah, absolutely. So we have about 20 secured parties, 150 pledgers that use us to segregate collateral from their counterparty mostly for borrow, lend, and derivatives.
Yeah.
And historically, some of that was posted in cash or say USDC, USDT. And now if they can post a tokenized money market fund, earn 4%, they're allowed to be capital efficient and reduce their financing costs. So that's a lot of the driver for us onboarding. And the good news for us is that technology that we've built around tokenized money market funds is easily transferable to tokenized equities. We've already onboarded, I think, close to 36 tokenized equities. We haven't seen a lot of volume in that, but with our partnerships, including with Gabe and team, we expect that to continue as we see more demand in the market.
Yeah.
I think there's an interesting thing that's starting to form when you get a group of companies together to think about what's possible with tokenized equities. And very near future, you might see, something like this might be possible, where it's like, oh, bring us the shares that you have in Schwab that's really not doing anything.
I have those.
Bring it to Gemini, right? And then behind the scenes, BitGo will take those and then they will earn Bitcoin for you.
So this is a very natural segue. They didn't ask for this plug, but to talk about Dinari Financial Network, which all of our current panelists are a part of.
Well, I mean, I think it's really about that standardization. So we announced the Dinari Financial Network about a month ago, I think, or a few weeks ago, with the intention that this is going to be a different kind of L1. So a lot of people are announcing chains, and it's like, oh, bring us the liquidity to this chain or that chain for X, Y, and Z reasons. We thought that's actually just contributing to the fragmentation, the very fragmentation that I don't want happening in the capital markets. And so what we actually ended up doing is we work with a variety of different chains and basically said, okay, you want tokenized equities. I think it's best if we pull all the sort of on-chain tokenized equities together. It's better consumer experience, right? Like if you want to sell an Apple, you should be able to sell an Apple. And the way to do that is whichever participant that brings business to this infrastructure, they can mint the underlying tokenized equities to whatever chain they want. Okay, so whatever Coinbase brings this business, they can mint it to Base. It doesn't have to live on the Dinari financial network. Rather, the DFN is just a coordination layer that can actually match orders across different chains. And the power of that is for the benefit of everyone. You mentioned like limited liquidity 24/7 and things like that. Well, part of it is like we have a bunch of different places where the liquidity flows through. So the idea for DFN is Dinari doesn't own it and we don't control it. It's going to be
You just took the name, respectfully.
The consortium can rename it if they want to. I think the whole idea was we saw everyone launching tokenized equities on their own chain with their own infrastructure and say, come to us. And rather, what I want to happen is for people to really be jailbroken. They can go to any of the whatever UI, UX they're comfortable with, but it will all be run through a network that is a public good that allows people to have the maximum amount of liquidity and benefits in their experience of trading equities or whatever tokenized securities they want to trade. So we built this thing. We are launching it with some partners, and over time, any sort of potential partner can sort of take part in what this becomes. And like I hear this all the time, right? Like this one company doesn't want to send any liquidity to a platform that their competitor built or anything along those lines. Well, okay, fine. Here's literally a standard that just exists out there. Anyone can access it. That has gone through the right process with the SEC and FINRA and all these parties. And then now they have the benefits of all the pooled liquidity of the group that already exists. I think that's really the vision for DFN. And Dinari, happy to be the sort of original builders of it. But I think over time it just becomes its own thing.
I don't know if you coined this, but I'm going to give you credit, but the exporting of U.S. capital markets to the world. So there's that part of this. And then there's the idea of re-architecting U.S. capital markets, which are then going to export to the rest of the world. Are those things viewed by each of you in the same vertical? Or are they very different efforts? And it seems to me like the former, which is exporting U.S. capital markets, has happened first. But how do you think about both of those in your respective businesses? So I feel like you are more exporting U.S. capital markets to users of Gemini and what you guys do. And then, maybe there's some integration with, DFN. But does one have to come before the other, or can this all happen as it is now simultaneously?
I think it can happen at the same time. I think it's like the same sort of implementation, but just different use cases. The same way, like, the meaning of Bitcoin to somebody in Argentina is different than somebody in the US. And maybe the needs are different. It's more dire in failing, economy or currency. So I think that it's probably like the same implementation. It's just a different use case and need.
Yeah, look, I think early days we're seeing the demand being outside the US, right? And the conversations we're having are, we have about 100 exchange clients where they're trying to say, okay, well, our clients want it's similar to Gemini. They want to trade crypto. Okay, if they want to trade some tokenized equities, we can then be able to allow them to trade both. Yeah. So I think over time, as the regulation changes, you're going to see the adoption in the US. And then the question becomes for the major infrastructure players, the DTCCs, the major custodians, is a way for them to save costs, or is there an economic benefit? And how you answer those two is going to determine how big that tokenized equities gets.
I think it's been kind of unidirectional only because of the previous administration and some of the forces that were at play there. I think in general, the world wants to follow suit with what the US sets as a standard or a set of regulations or compliance that's required to make this happen. So now that that's happening, I think we're going to see this globalize much faster. I think it's going to be bi-directional, like in the form of equities, for example. What stops us from importing, whatever, Saudi Aramco or whatever other interesting assets that are out there for U.S. investors and vice versa. I think there are going to be interesting interplays that happen there. Or like, it's a brave new world now. Like you can go on Gemini in Europe, buy Gemini stock, type of thing. Like, these are interesting things that are breaking down what we would think of as traditional barriers. And that's just getting accelerated because the US is now leaning in, which is really good to see.
Okay. Now I can ask more fun questions. So, what event, so COVID, for example, accelerated the adoption of Bitcoin as an asset. And maybe low interest rate environments, accelerated DeFi. What is the event that you think catalyzes tokenized equities?
I don't want to keep saying it, but I think it's the regulation in the U.S. Ultimately, we have firms that are doing this in EMEA, and they're looking to do it in the U.S., but they won't until they get some clarity around that. So I think getting that clarity will open the door, and then you'll start seeing the traditional finance firms who are very conservative and won't do anything in the space until they get that clarity from...
You purposefully using the word clarity often here?
Exactly. Because for the three people that have read the paper.
Exactly.
Yeah. I think it's just bringing Project Crypto to life, which will take a little bit of time, but it's in.
If you all read that, you would know.
Yeah, evidently,
exactly.
People need to be forced to read it first, and then we will actually adopt it.
But I think that really opens things up quite a bit. And I think the prior commission, really closed the door off to any innovation. And I think we have to remind ourselves that actually we can innovate. And so I think Project Crypto is probably the big thing that sort of opens it up.
Anything from you?
No, I have nothing to add to that. It's just the SEC.
Plus one?
The SEC needs to move. And I think they are moving. In all of our conversations we've had with them, it really does convince me that the SEC is going to enable tokenized equities. Dinari is launching tokenized equities in the US next month. So it is happening.
Emma got very excited about that, I think.
Yeah.
Is this the first time you're mentioning this?
I guess it is.
Is this an announcement?
Yeah.
This is an announcement. Dinari is going to be releasing T-shares in the US.
So it's imminent.
Imminent.
Things are about to happen imminently. Now, it's going to happen in stages in terms of what you can do with those tokenized equities in the US, because the SEC does care a lot about consumer protection. But they're also not saying no. They're just saying yes, and let's work on it together to see where it goes. And that's a very different SEC than what we've seen in the last few years. And so I am very convinced. Cameron said something bold at the beginning of Project Crypto and what timeline does that happen. I think we're going to see major things happen in the next year in tokenized equities.
Got it. Okay. All right, I'll ask a fun question. So if we have tokenized equities and the world is on 24/7 trading, does that indicate that the poor, first through fifth years at the prop trading firms are going to be working psychotic hours for the next in perpetuity? Or do we think that there's a new form of liquidity providers in the form of AI agents or the like that would be able to now interact more closely with the capital markets through smart contracts?
So like humans versus robots? Are the robots going to get tired?
Humans with robots. We never versus. There's any robots in the room with.
Yeah. So the question is will people be working?
Does this? Does this? Because I could tell you, the first few years of tokenized equities is going to be an arbitrage's dream, right? It's just that is the way it's going to be. There's going to be a lot of mispricing, misalignments. Jane Street's going to make another $25 billion, and so eventually, is the steady state of the tokenized equity world? Does it look like the current market from a participant standpoint, or is it much more integrated with things like AI? I had to bring up AI. You have to these days.
Got to throw that in.
Yeah, of course.
Right? AI. I think a lot of these firms do have global presence and are trading 24/7 as is. I'm not sure a whole lot changes. I think they had desks all over in Singapore and whatnot. So I think that doesn't change. But I think things like MicroStrategy stopping to trade at Friday afternoon, and then the underlying trading through the weekend, like closing that gap, more price discovery, probably increased liquidity from other parts of the world that now come online. So I think you're probably going to see more liquid, deeper U.S. capital markets because you're bringing everybody else along. But I think the trading firms probably are set up to already do this and are doing it on some level. And they're probably hedging their positions all weekend long and watching it into the open and the closes and stuff like that. So I'm not sure it changes too much, to be quite honest.
I want to use one more idea to this question. We've gone through a few different crises, GFC, for example, and they've used weekend hours to navigate and position themselves in a certain way in an environment where you can't necessarily use that blocked non-market hour times. So that might be something. Does that come up in conversations with regulators around the ability to manage capital markets through crises if there's a 24/7 tokenized equity market? This was a random question that just popped in my head.
Well, I think that was the same argument that the opponents of like overnight trading actually used initially before we turned on overnight trading. And so I think for as long as you go back, you can see, opponents have always used that argument. Mm-hmm. And we have always found a way to sort of compensate and get used to the new normal. So I don't think that's unique for weekend trading.
Okay.
I think it's just going to happen naturally because that's where the market is headed. But I think it is going to be interesting because once equities are tokenized and all that stuff, and then all these other assets are tokenized, or we have like native tokens and Bitcoin and all this stuff, it all of a sudden enables perhaps smaller players to now invest across asset classes and manage different assets and things like that. So we may see entirely sort of new businesses kind of pop up that are more efficient than the legacy businesses, and then the legacy businesses sort of have to compete against that. And so there's going to be this whole new, really interesting dynamic that might take advantage of the fact that you don't have these block times, right? And they can just compensate for it.
So is your point to trade in the current system, you have to connect to like a lot of different venues and there's just a big lift there? Whereas like if it goes on chain, there's just less of that.
Yeah. I mean, there's a lot of work behind the management of an ETF across multiple asset classes.
Right.
Once everything gets tokenized, you can do it from one system, theoretically, right? Somebody's going to build that infrastructure, build that system to do it. Mm-hmm. And so you're going to all of a sudden see these indices or ETFs and things like that are going to be across asset classes that no longer require a 100-person team to actually manage.
Mm-hmm. Agreed.
Yeah. Agreed?
Agreed.
All right, we have a minute and a half. What should we talk about? Are tokenized equities, now that we've completed this conversation, how would you reframe the title of our panel? That's a good one. I like that question.
Yes.
Make it definitive.
Uh-oh.
Take away the question mark.
All right, so punctuation,
it's important.
Would it be a period or an exclamation point as opposed to the question mark?
Exclamation point.
Exclamation point, okay. You can't take that answer. You have to.
I can't argue with him, so.
What do you got?
I think tokenized equities is the biggest shift in the financial system. And let's say 1933 was the last, really, really big one. It's the biggest one since 1933.
Yeah, it's as if we're in 1933 and we're looking at the next 100 years of U.S. capital markets. That's what this moment is right now. And I think the foundation for the next century is being put together right now as we speak. And I think we'll look back a decade from now and say, wow, that was a really big, transition in capital markets. Probably not since another 100 years happened. So.
All right, we'll put an exclamation point on that. We'll give you back 30 seconds. Thank you, everybody. Thank you, panelists.
Thank you.